So do you ever wonder whether you should stop trading SPY? You have some great trades in SPY, but overall you just don't make money. In this video, we share an example of specific rules that lead to making money in SPY. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, we share specific variables that went into a winning trade in SPY and how you can make this into a profitable trading symbol for your trading. Let's get to work on sharing these important trading lessons so you can grow your trading account.
All right, so this is a extreme tick fade trade I took on SPY on Monday. And this also kind of gave me some more information to exit out of a Snapchat short and then end up flipping long in SPY. And so at this point, SPY is sold off 7 points. It's down 2% on the day. So just steep selling all day, as well as I think there's 3 or 4 extreme ticks. So the one that's being printed right now is the 5th extreme tick of the day. And this is right into 336, which is a pretty strong long-term level.
Can you explain what you mean by extreme tick?
You can kind of see this, I would say, indicator in a way down here. So it ranges from typically like plus 1,000 would be an extreme positive tick, and minus 1,000 would be an extreme negative tick. So it's the amount of stocks in the NYSE that are either upticking or downticking at the same time. So when you see a reading at negative 1,000,
that indicator is NYSE tick?
Yeah.
Oftentimes you can find it by typing in a $ TICK or TICK on your platform.
Along with the tick index, you can also pair it with the AD line, which would just be $ADD, which is also a very good kind of index to watch along with tick when you're trading SPY. So then I'll get this started. Yeah, so I just wanted to kind of point this off. So we're coming in, selling off steeply, and then I'll flip over to my entry spot. So whenever I want to get involved, so at this point I had already closed out my Snapchat just due to the extreme tick and the overextension in the market. But whenever I want to flip long on a extreme tick.
What was the extreme tick, Sam?
Minus 1,100. So pretty extreme. The whole day we've been holding below the zero line, and this was the second largest tick reading of the day. And so at this point, if I want to get long with the tick reading, I want to see a new price low in SPY, and I also want to see tick after it sets this extreme tick. So the extreme tick is this kind of green bar I have highlighted right here. I want to see a new price low, but tick not make a new extreme tick, as well as the AD line making a higher, either higher high or starting to uptrend. For me to get into a big position, I want ideally this 70 level. I want to see a new price low, so I want to see this 70 level drop and then instantly rebid. So I just have a little bit of size on for field position, but for me to actually get involved in this trade and look for some more upside continuation, I want to see this level. So I spotted this kind of this 70 cent range has been holding for pretty significant time on the tape. So if I see this level drop and instantly rebid, that's kind of my signal where like, all right, I'm getting long. I know where my risk's at. Because now if that 70 level drops, rebids, and then drops again, I'm just out of the trade. So I'm watching the 70. And then you can see this whole time while we're still hovering at low of the day, ticks are starting to increase. I pull up the AD line as well. So I'll rewind that for a second. So you can see that 70 level drops. So we'll see. This is super fast. on how it drops and rebids, and that's the kind of the exact, so you can see it drops out, and then we're already back into the 70s, so I add on, I doubled my size right there.
Sam, is your stop maybe below 60 cents right there, or is it below 50 cents, or what are you thinking?
I would most likely be giving this until like 49 cents, just below 50 cents. Because, so on this day, I mean, taking these extreme tick fades is a pretty risky trade. So I typically take smaller size. And just for the context of the day, we've been downtrending all day. So this is a counter trend trade, like long the market. So you have to be wider stops for counter trend trades. And you also have to, it's more of like a tape based trade. So if it dropped out right there down to like, let's say 50, 60 cents, I probably would have hit in and then just hit out right at 50. Because this is a trade where you wanted to rebid instantly. So now that we rebid 70, if we drop down into the 60s again, I'm most likely just going to cut my position. Because you want this to work like almost instantly in your favor.
You're noticing that 70 bid and then rebid, and I'm wondering if the stop for you isn't kind of near the low of the tick below 70 cents. I think it got down to about 64, 63 cents. And then I just added to 59 cents because that's, you have a little bit more room. And so that was my question.
Yeah.
You know, is your stop 59 cents or is it 49 cents? You know, is it below, is it sort of below kind of the most logical price, below the tick below 70 cents? Or is it, are you going to give it more to that $half area and give it a stop there? Those are the two things I'm thinking about immediately. Stop below the low of the wick, stop below the $half area.
Yeah, so I think the best way to play this trade would be for that size I added on that kind of impulse wick that rebidded. I would just give that probably till like that 49 cent range. And then those that other 50% of my position I had on before, I would give until the bottom of this wick. Because now that it's dropped at 60, we've already printed an extreme tick. You can see a lot of other, I don't have a lot of other stocks in the market pulled up, but at this point, a lot of other stocks are starting to rebound a little bit. So at that point, it's like this, if this is going to go, it's going to go now. These extreme ticks that get pops, it's usually like a 3 to 5 minute period where they'll actually need to start working. Otherwise, it'll just kind of start consolidating. And then if it consolidates and spends a good amount of time in this zone, then it's just kind of a failed extreme tick where you don't even want to be involved on the long side, especially in like a very steep bearish day. So at this point, we're holding the 70s again. So now if it drops 70, I'm not really happy with this trade. So I want to see 70. This would be an okay area to add a little more position once we start to see a little volume coming through. And once I pull up 80 lines, you'll see the 80 line had a really strong reaction here. So the 80 line and so majority of the stocks in the market are already trading higher, but SPY's somewhat lagging that move. Ticks are starting to increase a little bit. And now we're into this 80 range. So this is kind of a spot where you really want these 80s to hold and ideally get a flash into 336 to take off a little bit of your position, because a lot of these extreme tick fades fail. So you want to cover your risk when you're given the opportunity.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window. So don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So now we're going to push into the 90s. And you can see once we hit the 80s, we never dropped 80 cents into the 70 cents. So that's adding a lot more confidence in the trade. So now that we're at a whole number, I really want to see price hold. And you can see we keep wicking above, but we're failing to hold. So I end up flipping out of, so right there I flip out of a little bit of size. just because we're not getting any push above. So when we were holding at 336, we weren't getting that push to like 336.05, 07. We kept stalling out at that 336.02, 03 range. So that's a good spot to cover just a little bit of risk just in case this is a failed move. But you also have a lot of checks in your favor at this time. We're pushing back up to the 0 line on tick. You're getting a little bit of a pullback. But at this point, I'm in from a pretty protected price. If it would come back to the entry, that's just my signal to get out, especially if these 80s drop. Because that's kind of a big thing on this move. The 80 cents never dropped in that range. So I want to see if buyers are going to step back in and push this back above 336 and start holding above 336. So now we're back in the 90s. Not much selling pressure in here at all. And so now we're starting to push above and hold above the 20-day moving average. So at this point, we regained 36 and we were able to clear some of those levels that we weren't able to before. And now we start to see price moving a lot faster than it was in this range. So a lot of short sellers are getting out of their positions around this area. A lot of longs are starting to pile in. You can see there's a lot of uncertainty, just a lot more overall speed in the tape. And this would be a pretty strong failure level previous breakdown zone. So I ended up taking more shares off a little bit back there. Just cover some more risk. We're getting a pretty strong move here. So now we crossed the 0 line. We just printed the highest positive tick value of the day. Because we really hadn't, so the whole day we failed to cross over the 0 line. You can see almost every single tick above the 0 line failed. And so now if we can continue to hold above the 0 line, can I have almost a flip? Oh, it's not a flip in the trend, but more of a flip in the market internals. Where if we can start holding above 0 line, 80 line starts making higher highs and higher lows, this would be a great trade to hold for the remainder of the day.
All right, a question. So if you can just stop the tape. Why were you trading SPY?
So right now, SPY has a lot of opportunity just because of how pretty much, I mean, the range in SPY is at one of like the highest levels we've seen in a while. And I just naturally trade SPY pretty well. The best thing about SPY, in my opinion, is a lot of these other indexes and tools you can use to trade it to add a little more advantage. As you've seen, I've talked about this tick index a lot, and I base a lot of my trades around it, as well as the 80 line. So I can have almost 2 gauges to trade one stock versus just, let's say I'm trading Snapchats alongside. A lot of these internals aren't going to play as big of a role into it. So it just gives me a little more confidence in the trade that I have more tools to work with, I would say.
Okay, and how was volatility on this day?
Volatility was, so on this day was the volatility broke out of that 30 resistance zone. And I think it was at like 32.
Did you get a sense that, is there a way that you're measuring that the market overall was oversold in addition to you looking at the tick reading?
There's like a few things. I was using RSI in this case, just for on the intraday level. We were at, I think it was 17, and typically anything under 20 would be oversold. Like I'd say 20 is pretty heavily oversold, and especially on an intraday reading, if we're right around 70 on the RSI, and we're getting these extreme ticks, and so just a lot of the things lined up at the right spot.
Yeah, and I think that's why it worked. So I guess my question to you is, at the end of the month, when you go and look at how you've done in SPY, what are your results? You want to pay special attention to that. SPY overall is something that almost universally traders don't make money at the firm. But that does not mean that we can't make money in SPY. That does not mean all traders can't make money in SPY. That certainly doesn't mean you can't make money in SPY. SPY tends to be one of the most overtraded products, which leads to not making money. That is one of the big issues, is that people trade it, they think they have edge, they don't have edge. They do well on one particular trade, they go back to the well too much, and they don't see why a certain trade worked in SPY and compare it to other trades that don't work. And so when you're saying to me that I've got an indicator that I'm using that tells me that that SPY is oversold end, so it's oversold, I should be looking at it because I have an indicator, that indicator works for me, great. And then I'm getting an intraday indicator, NYSE tick, and I'm using a good indicator for that, an extreme tick, and I put the two of those together. And also, by the way, I've got the added advantage that I've got a lot of range, so it's going to move a lot, so there's reward relative to risk in this particular play. Well, maybe after you measure that at the end of the month, maybe that trade makes sense. There's certainly lots of edge to be gleaned by looking at extreme ticks with NYSE tick. That in of itself is a trade worth study. That is a trade you can make money in, 100%. And so I just want you measuring, I just encourage you to measure at the end of the month what specific types of SPY trades you're making money in, and taking those specific SPY trades. Because if you don't, it's going to be a struggle. I can tell you that internally at our firm, there have been very smart people, not myself, who have at times suggested that every trader at the firm be disallowed from trading SPY. Now, granted, this was years ago. This was a few years ago, and this was during periods of time when volatility was lower, 12 to 15. And so, obviously, the results have been much, much better in 2020 because the volatility has gone up. But that point, that point that smart person made comes from somewhere. It comes from years of looking at professional traders who trade stocks and trade stocks well, dipping into SPY and trading SPY, breaking even, over trading it, maybe even losing some money. And that person seeing the results for the firm overall not particularly good. I caution you, absolutely, I like where you're going with this. This is worth study. You're on the right track here. You just got to be really selective with the SPY trades that Sam takes under certain conditions, and you're measuring it during different markets. Like, for instance, it may be that trade right there works well when VIX is elevated, when volatility is elevated, but it doesn't work as well when volatility isn't elevated.
Yeah, it's a great point because, starting off in my trading career, I would just get chopped around in SPY pretty much all day. And looking at the stats, there wasn't really that edge until I kind of did what you talked about and put together really strict criteria on really the only times I can trade SPY. And that correlates a lot with only trading it at these extreme levels, because that's where you're going to get a price movement and know if you're right or wrong right away, rather than just sitting in a trade all day or sitting in drawdown all day. So I think it is really important with SPY just to pick your prices and pick your trades and be very strict with it, rather than treating it like a normal stock. Because I've had success, but I wouldn't say too much success in SPY until I kind of got, my rules were much more strict. Yeah, and so here you can see volatility was at 32.9, so they're pretty much 33. Coming into some consolidation, ticks are fading. I'll push to this breakout, yeah. And so here's the 80 line I was mentioning earlier. So we bottomed out and we're starting to get a push, but not too strong of a push. And then for volatility, we kind of had almost like a blow off top in a way, a full engulfing candle. So for me to stay in this trade, I want to see SPY continue to make new highs, volatility continue to fade, as well as the AD line start to make new highs and break out of kind of this consolidation range right here.
Sam, is there a range in the trade that you need to actually place the trade? So if SPY isn't going to move $1.50, if SPY isn't going to move 30 cents, if SPY isn't going to move $2, is there a particular range amount that you're thinking about before you place a trade? Or is it risk reward? Or is it, I need a 5-to-1 risk reward or else I'm not going to make the trade in SPY?
I mean, I wouldn't say coming into this because I treated it as a scalp trade that ended up kind of holding for an intraday swing. So for me, right away, technically 5-to-1 would be scaling out almost at these highs right here with such tight risk. So it's pretty tough to come in and say, I want to trade 5-to-1, because if you exit your full position at 5-to-1, I would be out somewhere right in this range. So it's really kind of trading it how it is. So if it's pretty strong and it's showing strength, which we haven't seen all day, which is strong change of character, it kind of gives me the confidence to hold on to this. Because after we're down 2% on the day, we're down 7 points. There's a lot of more upside potential than to the downside. So for this trade, I wouldn't say I really came in with an exact kind of range or price target I would want. So it was more so getting out at the first time, kind of the first sign that I need to get out. If we start printing plus 1,000 ticks and I see volatility spiking, that's going to be more of an emphasis for me to get out of the trade than, let's say, it's rallied 2 points from the lows. I just want to see a lot of kind of checks in my favor add up to exit rather than just taking it strictly off of a like 5-to-1 risk reward, because I potentially could get 10-to-1 sort of thing.
Okay, good. Got it.
Nothing too much more important on the tape.
And where do you get out of this?
So this was kind of right in my entry zone. I'm pretty sure I closed out kind of right in this chop consolidation range. I missed the end of the day push, but right when we kind of peaked out right around here, I don't have it on the actual tape. I just held around 50% of my position to these highs, and once we hit kind of this consolidation zone, and we just started to not really have that same bullish momentum here, and then so I ended up just getting out right in that range.
Okay, good. That's a nice move. No, and I really like what you said, which is for trading SPY, you need strict rules. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.